Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York. It is Monday, June the 6th. We are looking at U.S. equities markets really closing up fairly strong on the day. Dow Jones Industrial Average did close up and finish on strong terms, off of the highs a little bit, but still a very, very respectable gain, up 113 points to close at 17,920. S&P's also trading higher on the day. Of course, we're looking at the E-mini, 2108, putting it up about 10.5 points. We did make a buy recommendation today. We'll talk about that as we pull up our first chart in the Standard & Poor's 500. And so traders, that first chart I do want to look at today, basic daily candlestick chart of the Standard & Poor's 500. What is important or noteworthy that we really want to look at on this chart is where we believe we're at in our current Elliott wave count, as well as where we are at in terms of record highs and moving averages. And we've got all of that information here on this particular chart. Now, first, it's my current belief that the rally that we experienced, this major rally that really began mid-February and concluded mid-April as this market was trading just above 2100 here, concluded a 5 count in terms of our rally. From there, I believe we had some sort of an A, a B, a C, and then from there, we started yet another rally. Now, that being said, this rally here, as I talked about on Friday, the important thing to me was to either buy a dip at around 2080 or buy a breakout as it broke above 2100. Now, it did just that today. We're trading at about 2108. 2109.25 is actually the current print I'm looking at on our screen. Price won't change until, of course, I move the basic market or cursor down. I'll bring that in to show you what I mean, but there's our current change. So we're currently in at about 2109. We recommended initiating a long position, traders taking that caller in at 2110, roughly in this area, a point above the current price. And my sense is that this market will take a stab over the next month or so for this top up here, which is about 2122. And then beyond there, we start moving into record territory. Of course, on an intraday basis, I believe that we did come to a new high today. If we take a look at where the year starts itself, this being our former high, on the E-mini, we definitely closed above that. So on the E-mini S&P, we are closing at a new high on the year. Certainly not a record high. As I said, we have record highs above that. But this is a really significant area on a technical basis because we have a lot of history where this market has traded to this point and then sold off. So the fact that we're able to really maintain above this price point tells me that we could see the market consolidate. And as long as it stays really above 2080, which is where our stop is, we've put it below 2080, we should be taking a stab for this particular area at 2120 and above. So traders, obviously, after the extended period of excitement on Friday, as we saw some markets plummet, such as the US dollar, some markets take off in a runaway rally, such as gold and silver, you can see that at least for today, we have a nominal move in the dollar, trading off about 0.3% at 93.99, and so we do have an area at about 93.80 that has provided, I believe, a little bit of support on a technical basis. We'll have to go ahead and pull up another chart where you can see this number come in from. So I'm going to be curious to see if it holds this particular area. Of course, comments made by Janet Yellen today have really reinforced the fact that we are at this point probably not going to see a rate hike, interest rate hike in June. Could see it in July, could see it in September, could see it in December. The one thing that we do know is a certainty is that the FOMC is meeting both this month and next. Those are two things that are etched in stone. Another certainty is Yellen will speak, I believe, on 2 more occasions over this next month before or one time prior to the meeting and one time after the meeting. And so we've got plenty of opportunities for the Fed to speak their mind. But as it stands now, we are looking at a stable interest rate to maintain itself at these extremely low rates. And so traders, lastly, I do want to look at crude oil. Crude oil up about 2.3%, a $1.12 gain per barrel, 49.74. That's the current prices. We take a look at this marketplace itself, this being a daily chart. And the one really important piece of information that I am gleaning from recent activity in this market, this is an upper level, this is what I call a cascading channel line. The channel line will simply look at a market as it trades in an upward momentum, staying within a particular channel, but trading to highs and lows. Now, I still believe that we'll cap off at about 50. I believe that that market has some real resistance in the area. However, on a technical basis, irregardless of what I think, what we're seeing is the market finding really good support at the lower ends of these bands on the occasions that it comes down and touches these areas, and finding resistance at the upper levels. So we are now back at these upper levels, this being $50 per barrel. We'll have to see if it is able to overcome these headwinds of resistance that are currently in the market, as we now see crude oil back in this particular price point. Maintain your current long position in the Standard & Poor's E-mini. Maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. Have a great day. We'll talk to you tomorrow for another Trending Markets. Bye-bye.